Good morning, everybody. Welcome back. I'm Craig Berger, Hedgeye's Technology Sector Head and Semiconductor Analyst. Wanted to clarify my opinions and thoughts on 4 chip stocks. Here they are. First, Microsemi, ticker MSCC. It's an interesting small mid-cap chip stock with analog and communications networking exposure. Today we are adding shares of Microsemi to our Hedgeye Semiconductors long ideas list and raising our fair value estimate to $31. We think Microsemi is a solid small cap, mid cap chip stock slowly transitioning into a bigger firm. They've acquired and consolidated a number of smaller players to build scale, add technical resources, and the stock is trading at a discount to other analog chip stocks out there. So we think Microsemi can be somewhat defensive in a down market with support at roughly $23 a share, and yet can appreciate in an up market towards or beyond $30 a share. And so we do like the positive risk-reward dynamics on Microsemi. Secondly, as we add Microsemi, we're removing shares of Atmel, ticker ATML, from our long ideas list. Remember, Atmel makes microcontrollers and touchscreen controllers. We still like shares of Atmel over the longer term, and they have a good gross margin expansion story going on. But the stock is a higher beta stock, it's more volatile, and the chip stocks are acting a little dicier this week following the Apple event and with a bunch of good news baked. And so going to a more defensive name like Microsemi and away from a higher beta name like Atmel. Third, ticker is Fairchild Semiconductor, ticker FCS. We're adding Fairchild to our short ideas list and lowering its fair value estimate to $15. There's quite a bit of good news in shares of Fairchild. The stock is expensive on a forward earnings basis at about 15 times earnings. That's pretty expensive for a lower margin, discrete and analog chip firm out there. It could be paired against an on semiconductor long, which is less expensive, has less hype baked into the stock, and less elevated expectations. We don't have anything negative on Fairchild specifically, but again, they have Apple exposure. That event has just passed and valuations are high. The fourth stock we want to talk about is Broadcom, ticker BRCM. We are lowering our fair value estimate from $48 to $45. A smaller competitor in the cable set-top box market, MaxLinear, pre-announced much lower revenues earlier this week. They basically said that the set-top box customers are pushing back on new orders because of increased inventory in the channel. We know Broadcom has about 20% revenue exposure to the set-top box market, and that could drive some increased risk for Broadcom revenues in the future. It's still a long ideas stock with upside to $45, but the stock is not as unloved as it was 6 months ago or a year ago. It has rallied from $25 a year ago to $41 today. So still inexpensive, still a product leader in a lot of areas, but more near-term tactical risks in the set-top box area. So that's what we have today. If you have any questions, send me an email on Twitter @HedgeyeBerger. Thanks so much and have a great day.